Trump has come down heavily on all the countries across the globe except for a few, with heavy reciprocal tariffs, as he calls it. There is a mechanism under which they have started taxing or tariffing every country today whose imports are getting into the US. This is generally assumed to be negative for the markets and the economy in general. This could possibly push economies down into recession. Smaller countries like Vietnam, smaller countries like, let's say, Bangladesh or maybe Thailand could actually be struggling for growth going forward, at least for the next 1 year, 2 years, till they find newer avenues. And that's one of the reasons why there's a fear all around. And this has led to severe market correction in the recent couple of days. See, while the world is actually talking about recession, slow growth, India still can end up doing 6% plus kind of a growth. So India is definitely a shining armor at this point in time, and more so when other countries around the globe are doing so badly or expected to do so badly. India's 6%, 6.5% growth shines very good. That's one of the reasons why the reaction to India's stocks and Indian market has been a little better. The other reason why India has done a little better in the recent couple of days is also because the tariff is actually lower in India than for, let's say, China, which is almost 50% plus, or maybe Vietnam, which is close to 40%. I don't remember the exact number. So when you compare all this, good growth and not such high tariff is actually working good for Indian equity markets and Indian economy in general. No, I don't think in India. For sure, there are good probabilities for the globe to get into some kind of recession. Few big countries, in fact, US itself is expected to get into recession if at all these kind of measures get implemented and are not negotiated. There's an expectation that US itself will get into recession, and when US gets into recession, a lot of countries that depend on US will also have some negative impact. India, fortunately, exports only about 18%, or the share of exports to the US is about 18%, and is not very tax heavy. So I believe India's GDP growth rate can come down, maybe about 40, 50 basis points. The number is still not out yet. The estimate is still not out yet. But recession in India, I think, is a very distant probability. One of the things that I was reading is gems and jewelry is one sector which is going to face a lot of heat. Auto sector is any which ways. We saw that around March 25th, there was some ordinance which came in which said autos will also be heavily taxed. The auto components which are getting imported into the US will get heavily taxed. So these are the two specific sectors and segments that should get heavily affected. We've already seen the effect of auto imposition of tariff on auto on the markets. Gems and jewelry, not many companies are there, and for those companies that depend on US, I think it's going to be very bad next couple of years for sure. See, today I was at lunch with my team, and one of the guys said if I had bought a put option on Friday, today it would have given me some 2000% or something like that, right? So this is going to be that volatile, and I'm talking about on the negative side. See, there are favorite trades, there are good trades, and there are bad trades. In most cases, for people who trade, do not understand the basics of derivatives. So it is going to be extremely volatile with a very high chance that you will lose your money faster. And that's one of the reasons why retail participants who do not use derivatives for hedging should avoid trading in these in general also, and in these heavily volatile markets. Thanks to SEBI today, going back, I think Mrs. Madhavi Buch has done a great job of curbing the retail participation. So I'm thankful for that. And I would request traders to avoid any kind of option trading, because there'll be a lot of news, especially on WhatsApp, that will float around saying if you bought the put, you would be worth 4 lakh rupees, 5,000 will be worth 4 lakh rupees, and all this stuff. Please don't fall for it. No derivatives at all. I'm saying If it is for your businesses, if it is a part of your hedging mechanism, yes, go ahead. But don't do anything which is just for the sake of speculation. But what I've seen is, especially those people who are not advised by, an advisor or an investment manager, people who go directly invest into mutual funds. What I've seen is a lot of them have not done thorough research and have fallen for storytelling-based investing. For example, maybe a defense. People have invested in PSUs funds. I'm talking about mutual funds. People have invested in, random, thematic schemes which people don't understand. Maybe even in a manufacturing could actually turn out to be bad. So if you're doing SIPs or if you have portfolios that have been invested into these storytelling based, very futuristic investing, I think you should try and relook at the portfolio, exit those, even though they must be at losses. It's okay to exit those and put those money into large caps, primarily because when the globe is going through such big turmoil, it is very difficult for an investor to put his risk cap on. So even if he wants to invest in equity, he will never think about sectors and themes and factors. He would first think of, okay, I want to touch equity. Let me go and invest into large cap. And that's where the liquidity will be. So my request is, if you're investing a lot of your money in sectors, factors, or thematic mutual funds, you should definitely rebalance it. Don't add to new money into it. Put more and more of your money into large caps and some bit into mid caps. Actually, this is a very new event and it's very difficult for anyone to predict it. But my guess is, even at these levels, Nifty is looking pretty good. Does it not? Does it mean that Nifty can't go down from here? Absolutely not. It could go to maybe 21,000. It could go to 20,000. I don't know. But in my view, if you're going to invest today, maybe about 6 months, you will see a lot of these negotiations, tariff, reciprocal, somebody creating trade wars. So there's going to be a lot of news around. So I don't see things becoming very smooth in the next 3 to 6 months. Maybe after that, you may see some green shoots. That is provided the trade wars are a little more curtailed. But not too much of, I'm a little less hopeful than I was maybe a week back. That I'll see some great returns in the next maybe a couple of quarters or so. They do not want to take any calls at this point in time because they don't know the global order. So tomorrow things can be very different than what it was today. See, for example, if I go short on Nifty, just for an example, and tomorrow or on 9th of April, if Trump comes and says, okay, for India, who's my friend, I'm going to charge only 20% because our team is already sitting there, our foreign exchange policy and the team is sitting there. That's a great news. I'm going to lose my money because I've shorted Nifty. On the other side, if I'm going to long, assuming that our foreign ministers could make some deal, if it fails, that's also a problem. So it's going to be very difficult for a foreign investor to take a call on the market at this point in time. So he will say, let world settle in. Maybe I'll take 2 weeks. Maybe I'll take 5 weeks. Let me see some semblance of market fall stopping or some clearer approach and from each countries, and then I will go in. So at that point in time, India definitely is a good shining place for a lot of these FIs to look into, primarily because the US Treasury yield, which was at one point in time went up to as high as 4.8%, has actually come down to 3.8% or closer to 3.9%, which means that sitting in US comfortably, I can actually make 4.8% in January. Today, I can only make 3.8%, which means I have to get out of the country to get into the other equity markets. And India definitely is one of them. So I think FIs will come back. When? It all depends on how the global order shapes up. Will it come? Yes. When will it come? I don't know.